Hello dear traders, I'm Maria Staradup and this is the review of crypto analytics from fx.co. It's the 14th of August, today Monday, and in our today's review, Bitcoin trades in wedges and why is it important to look to the past to understand its further dynamics, and what do charts of Bitcoin and Ethereum show us. And we will start with an article by Mark Petkovich and discuss Bitcoin's picture and its fundamental background first. So Mark says that if you want to predict the future, look to the past. And Bitcoin's summer slumber has dragged on, and such a low monthly volatility, according to Bloomberg, has only occurred with the cryptocurrency in 2% of cases of the last decade. After 7 and 10 such instances, Bitcoin quotes shot up on average by 16% of the subsequent 30 days. History always repeats itself, so instead of dismissing the asset as dull, one should take a closer look at it, Mark thinks. And the cryptocurrency market seems frozen in anticipation of the verdict of the Securities and Exchange Commission, and whether the commission approves or rejects applications from BlackRock and other large investors to create specialized exchange-traded funds with Bitcoin. Volatility is at risk of increasing significantly in any case. A positive decision could lead to a capital influx into a digital assets market. Conversely, a refusal would further deter large players from it. And while the regulator's verdict is pending, the cryptocurrency sector leader is trying to find fresh growth decline drivers and finds them in the US stock market. Thanks to the impressive financial results of Berkshire Hathaway, stock indices soared at the beginning of the week, leading up to August 11th, but the subsequent downgrade of 10 American banks by Moody's and the rise in Treasury bond yields negated their success. And Bitcoin seemed to have copied the S&P. It jumped at the start of the week, but then returned to dull and dreary consolidation. As a result, a correlation between them, the stock market and Bitcoin, began to grow. Despite the fact that the connection between Bitcoin and the class of risky assets is strengthening, it is premature to talk about full recovery. The cryptocurrency market is awaiting the verdict of the Securities and Exchange Commission, and only after that it will be able to return to full life. In the future, it will fully respond to the state of the global economy and the monetary policy of the Fed and the global appetite for risk. For now, the macroeconomic background includes the nearing of the end of Fed's monetary policy tightening cycle and the challenging situation of the Eurozone's economy and China's sluggish recovery. The first factor puts pressure on the US dollar and the other two on its competitors. As a result, there is a consolidation of the US dollar index, which serves as an additional driver for Bitcoin's tendency to trade within narrow channels. If we look at the chart, technically on the Bitcoin daily chart, the same downtrend wedge pattern was formed as in March-June. Then it ended with a breakthrough upwards. History may repeat itself, so traders should keep their finger on the pulse. A break of the pivot level of 30,000, where the upper boundary of the wedge is located, will increase the risks of Bitcoin quotes rising and will be a basis for buying in the direction of $31,000 and $33,000. Until this happens, it makes sense to switch to from short-term shorts to longs on a rebound from support at 28,000. Okay, let's have a look at the chart of Bitcoin for a moment. It's the 14th of August and Bitcoin opened today at the point 29,294, and now it is trading at the point 29,383. Well, nothing much has changed since the end of the previous trading week. All over the weekend, Bitcoin was consolidating around 29,400, 300 levels, and now it is still on the same levels. Right in the beginning of today, we saw some price downside movement, but then price again went back to the previous points. Okay, and now let's get to another article by Ralph Shadler and Ethereum. The information, the article was written on Friday. So, at the moment of writing, it was trading around 1,844. Still, the retreat could be only temporary after its last rally. Ethereum found a resistance right above 1,866, and now it has dropped, trying to confirm the breakout through the upper median line. In the short term, it has developed a flag pattern which could represent a bullish formation as long as the price stays above the weekly pivot point of 1,839 and above upper median line. Ralph's forecast is the following: jumping, closing above the flag's resistance and above 1,866 announces a larger growth. Okay, let's have a look at the chart of Ethereum for today, for the moment. The Ethereum opened today, the 14th of August, at the point 1,840, and now it is trading at the point 1,846. So far, it hasn't managed to jump and close above that very point Ralph mentioned. Further growth raises questions so far, but the week has just begun, so anything is possible. Well, this is all for today. We'll see each other in our next review tomorrow. I wish you a successful beginning of this trading week, profitable trading, and see you next time in our next review.